Hello, chart watchers, and welcome to this Monday, July 2nd, Market Watchers Live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Okay, well, we got another week started, another trading month, actually second half of the year underway now. And you can see the Dow Jones Industrial Average currently down 117 points to begin July. The S&P 500 down at about 10, the NASDAQ down at 18 points or so. The Russell 2000 week as well, down 5 points. 10-year Treasury yield is trying to rebound a bit. It is up about 1 basis point on some economic news, which I'll talk about in just a couple minutes. Volatility is back on the rise. You can see it back up to 17 and change, up about 7% today, but still unable, at least for now, unable to negotiate the highs we saw last week. Utilities leading to the upside, the only sector that was in positive territory. Energy struggling on the way down today, down about 1.4%. It is the weakest area of the market. Gambling stocks under pressure. There were reports of less than expected revenues from Macau, and as a result, a number of the gambling stocks are down today. We'll talk about that in a bit. Railroads doing well after bouncing off key moving average, and then a couple of the energy, one area of the energy stocks doing particularly weak after failing to get through that declining 20-day moving average, moving back down. We'll watch to see whether or not recent support holds. And then another group that actually has had a really strong last couple of months, the food retailers. You can see them pulling back today, having a weak day today, but nearing key gap support and the rising 20-day moving average. Okay, Erin, it is another new month, and we are starting the second half of the year. I can't believe the first half of 2018 is already gone. That's crazy.
Oh, I know. It went very, very quickly, as did this last month, I have to say, because I don't know about you, but I had to turn in, got my rough draft for my ChartCon presentation in. Very excited about that. I can't believe it's only a month away.
Yep. Did the same. Yet it is unbelievable. Now we're into July, so it literally is just 1 month away. If you haven't registered, please do so. Make sure that you've got yourself a spot there. Yeah, the whole thing, you know, back when I was in school, you probably remember this. I can barely remember it.
I know. I was going to say it's been a while.
Back when I was in school, didn't it seem like a school year took forever?
Yes, absolutely. And my husband, John, for him, no, it doesn't go fast.
It doesn't?
No.
Yeah, and I guess
no.
Yeah, I can see that. But for me, I mean, it seems like the years just fly by now.
Oh, I know.
I feel like we just celebrated Christmas, and it's July 4th.
Oh, I know, exactly. And yeah, another month, half a year gone. Lots to look at. I'm going to show everybody those monthly charts that closed out this month and see what we're looking for heading in. So should be interesting month. I don't know what you're thinking at this point.
Yeah, I don't really know what I'm thinking either. So I think maybe we just get
one of those Mondays. Yes.
Yeah, it is. Okay. It's one of those Mondays, starting a new month. It's summertime. Things starting to slow down. I don't know. It's just weird, but I'll let you take over here.
All righty. Well, tomorrow I do have my workshop. I think I'm going to do it on trading chart patterns. So when you find chart patterns, how you might want to trade those, set stops, and that sort of thing. Of course, July 4th, the market's not open, so Market Watchers Live is not open, so we won't be here. Bruce Fraser, though, will join us on Thursday, the very next day, Mr. Wyckoff. So that should be a great show to move out of the holiday. As far as for today, we have Monday setups going to start after that. The technical news. We're going to do some RRG analysis for our earnings spotlight. NASDAQ 100 in particular. First Solar is going to be our first symbol for the 10 and 10. And like I was saying earlier, I'm going to do the July decision point review so we can see what's coming up. I know there's some technical news and headlines. You were alluding to a few, Tom, so why don't you go ahead?
Yep, I'll take it away. We got the 10-year Treasury yield. Here's the update on this chart. Continues to drift lower. It's really been drifting to the downside now for the past 2 or 3 weeks. But today we are slightly higher, 2.86%. We did have a couple economic reports come out earlier today. We had the June PMI manufacturing, better than expected, 55.4 versus 54.6. Then the June ISM manufacturing also came in better than expected, 60.2 versus 58.5 estimate. And finally, May construction spending came in slightly below expectations, rising 0.4%, while the market was looking for a rise of 0.6%. And all of that combined, you can see we did open a little lower on the 10-year Treasury yield, but we have since rallied back. And on a shorter term chart, bring up a 5-minute chart, you can see that really we gapped down early in the session, and then almost immediately we have come back up. And since a couple of those manufacturing reports came out, that's what really sent us into positive territory here at about 10 o'clock Eastern, and has moved us back up. Now we've taken out, we've moved to about a 3-day high, or at least since the beginning of last Wednesday. So maybe this is a start of a little bit of a push back to the upside in the Treasury yield. Longer term, without pulling up that chart, still 2.75 or so to the downside is what I'd watch, while we have the recent high up around 3.11%. That's kind of more of an intermediate term trading range that I would watch on the 10-year Treasury yield. Let's pull up the XLE. I did this chart here, which you can see the XLE is on the top. You go down here, this is the crude oil price, the WTIC, and then I've got a correlation indicator here. I put something like this that was similar in my blog this morning. I think I did a 10-year weekly chart. This is a 3-year daily chart, but they both will show you very similar results. And the key between the two, as you might suspect, is there's a pretty tight positive correlation between the direction of the XLE and the direction of crude oil prices. I just checked a couple minutes ago. Crude oil prices are down, but they're down fractionally, maybe 0.5% today. You can see crude oil broke out, and this is just a 3-year chart. If I actually step this out, let's take a look maybe from a 5-year perspective. You will see that crude oil prices at the close of 74.15 on Friday, we are now in the midst of this huge decline. We've broken out above prior highs, and crude oil prices look to me like we're ready to continue pushing maybe towards that $80 a barrel level. And if that's the case, then you would certainly expect the XLE to break out. You can see that the crude oil prices have broken out above the earlier high that we saw back in May when we got up to about 72 or 72 and change. So we've cleared that, but the XLE, after getting up to about 78, 79, is now back down at 74 and change. So we don't have that breakout, although, I would expect it. It's not like these two go hand in hand every single day, but if crude oil prices continue to trend higher, it's probably only a matter of time before the XLE makes another breakout. And here's that correlation I was talking about. Just looking back over the last 3 years, you can see that almost all of the time is spent in positive territory, meaning that the two tend to move in the same direction. Anytime you get a correlation reading that goes below 0, it's telling you that they're beginning to move in opposite directions. But you can see that doesn't tend to last very long, and then we come right back up. That's why as we move down here into this negative correlation zone, we just barely breached that 0 level just recently. That doesn't happen very often, and when it does, we tend to revert back. So one of two things is likely to happen. Either we are going to see crude oil prices begin to drop back because the XLE is not broken out, or we should see the XLE moving up to clear recent highs. My guess is if I had to pick between the two, then I think XLE is likely to make that breakout to play a little catch up with what's been going on with crude oil prices. Okay, I mentioned earlier the Macau gambling revenues. They came out this morning, and they rose, I want to say 12%. I could have that wrong, but I do know that they came in less than what was expected. And as a result, we are seeing really weakness across the board in gambling stocks. Let's pull up Wynn Resorts. You can see, looking back over the last several months, we are breaking down to a new low here in 2018. Very heavy volume on this move. Perhaps we'll have some sort of reversing candle, but at least intraday, this does not look good. The month of June was horrible. You can see that Wynn was up at a 190. Actually, we closed at 196 or so at the end of May, and we are now down at 154. So that is more than 20% that we've lost in just the past 30 days or so on Wynn Resorts. The others look pretty bad as well. Let's take a look at MLCO first. This is Melco Resorts and Entertainment. Very similar. We had this top at the end of May. Looked pretty decent, except for maybe a little bit of a negative divergence. Looked decent. Had an uptrend in play as we headed into June, but June has just been horrific. Each time we've moved up on MLCO to test overhead resistance at that 20-day moving average, every time we failed. So that would be the first test for me, is getting back up above that declining 20-day moving average. The one stock in this space that was actually looking a little better was LVS, Las Vegas Sands. You can see we actually broke out in June. So this one was performing better later into June, much more so than either Wynn or Melco. But we did break down a little over a week ago. Huge red candle taking out prior support, taking out moving averages, went sideways, and now you can see with today's drop, we've got the 20-day moving average getting ready to do a death cross below that 50-day moving average. So it looks to me like Las Vegas Sands playing quick catch up with the rest of the group, and $68 support seems like the next level to consider on the on Las Vegas Sands. I actually was feeling pretty good about gambling stocks, thinking that maybe we were just consolidating, expecting a breakout, and they have certainly turned around, gone the other way, and we've lost some pretty key support on this group. So I think in the short term, I think even on a weekly basis, yeah, we lost the 50-day moving average today with this, or 50-week moving average, sorry, with today's gap down in heavy volume. And you can see that we had not really had a definitive break below the 50-week moving average in the past 2 to 3 years. Well, last two, let's call it 2.5 years. So this is a pretty big move technically on the gambling index. Of course, we could drag it out, and just like anything else, it's been in a bull market. If we go back 9 years to essentially the beginning of the bull market, you can see that we had the huge move back to 2014. We were under pressure for quite a while here, and then for the most part trended above the moving averages, when almost, well, actually we did get all the way back up to about 1100 to test that high, and now it looks like maybe we're rolling back over. So I think that today's last week's weakness, and really the month of June, the weakness in June, along with today's gap down, I think puts us in a much more precarious position as we go forward. So I think gambling stocks, until they begin to show a little bit better technical behavior and we get a breakout, I would be very careful looking at this group. All right, let's go back to the member dashboard, and under the control center, just a quick update on something I talk about frequently, but this is where I start my day, just looking at these sectors and what's leading. You can see that utilities are leading, but even utilities now have moved into negative territory. So we now have all 9 sectors moving lower today. Financials hanging in relatively well, technology, industrials. I think this is a good, fairly decent sign that we are seeing the three of the 4 aggressive groups hanging toward the top of the sector leaderboard. And even consumer discretionary, which is being taken down quite a bit by the gambling stocks, they are still outperforming their consumer staple counterparts today. So overall, yes, we're lower. I'm not overly concerned about the weakness here in the very near term. Again, I just think from a more intermediate to longer term perspective on the S&P 500 and the Dow Jones, we continue to see this consolidation. Leadership continues in the NASDAQ and Russell 2000. Although I will say that we did fail to hold a breakout on the dollar index. We had a breakout late last week, getting above 95. That was a huge level. And then you can see we came right back down pretty strongly on Friday to fail to hold that breakout. And if we look today at what's going on with the dollar, we can see it trying to bounce back and get back through. Only thing I would maybe caution a little bit here is we do have these higher prices in the dollar index with lower PPO. So I wouldn't be shocked to see a trip perhaps even down as low as that 50-day moving average, maybe test these prior lows, unwind the negative divergence, and then perhaps make the breakout. So something to keep in mind, at least as we move forward. Okay, I'm going to turn it over to Erin. I know she's got a number of upgrades and downgrades for you, and then we'll get into our Monday setups after that.
All righty, let's do this thing.
Okay. Wait, you're from California. You're not from like the South. Where'd you get that thing from?
Oh, you know what? My daughter went to Auburn for 4 years, and after that, y'all ended up in our vocabulary. And yes, just a little twang now and then.
So it's the
I do have a lot of family actually in Alabama and in the South. So
okay, so it's a little bit of that California / Alabama dialect.
Exactly.
Okay,
exactly. I know my accent's already kind of weird. Okay. All right, so I'm going to tell you right now, with the 3 downgrades that I looked at, you know how we like to maybe bottom pick at times. These are ugly. I would just not touch any of these with a 10-foot pole. Right now on the downgrade for Canon, you can see we got a drop below previous support back in July of 2017. So we're back below that with a gap down, a large gap down, if you can see that right there in the thumbnail. So that, I mean, I think this one looks pretty ugly. I think you could look at it on a weekly chart, and one of the things you might see, not on this one, I did see a Head and Shoulders. Actually, I think you could make a case for a Head and Shoulders here with a neckline right about here. But the main thing is that, you know, we're not even going to see some possible support here for Canon until at least $31. And I would say I would be looking for it to fall even further, 30, 27, all the way down there. So I guess if you want a short, certainly a possibility. Nordstrom is one. And on the downgrade, this one doesn't look quite as ugly as the others, but I would look at this as a triple top off of this rising trend here. We didn't get the move above this overhead resistance 3 times. We didn't get it. And now we've gapped down on this downgrade. You can see the PMO has got a sell signal and is heading lower. I mean, nothing really looks that great. I'd say the OBV is, you know, considering not looking horrible, but that breakdown below that area of support would concern me. I don't see this as either a long or a short, honestly. PECAR. This one, another ugly one. This, I can say, is really a clear Head and Shoulders pattern. And it has executed. And we are already heading down. You know, we had this double top to sort of reinforce the decline we were coming into. We've touched below that area of support, but look at that PMO, very ugly. Not liking that setup at all. All right, the upgrades I thought were really interesting. And honestly, one of them I would consider for a Monday setup. I think this was the one I was considering when I saw it for a Monday setup. You've got a nice rounded bottom here. You've got a move. We haven't quite gotten above that overhead resistance. And, you know, so you might want to just wait on it until you get that breakout. But the PMO is in oversold territory. It's starting to scoop upward with price. So I thought this one looks pretty interesting. You know, we got that horrible sell-off. You know, tons of volume came out of that, and that just killed the OBV. So I think this one, you know, there is still some weakness to shake off. But if you get that breakout, I think you have some opportunity here. This one, Dexcom, was another one I thought looked great. You know, we've gotten the breakout now above that area of short-term overhead resistance and heading up to a pretty good move up to the top there. The only issues I have really is the fact that, you know, the PMO is still in decline, and I think the OBV doesn't look that great. Scooter's okay, but, you know, I think the other one looked, the Curtiss-Wright CW looked way better. Okay, it's time for those Monday setups, Tom. And I know I wasn't here to give a pick, so maybe you can look at what Arthur picked. And if he did well, I'll take it.
Yeah, you're definitely going to want his over mine for sure.
Okay.
Yeah, Arthur went with Hormel. He said he didn't like the food, but he liked the stock and the way it was setting up. The fact, and I don't recall exactly, but I do think that there were some factors. He liked the fact that it was coming back up, testing resistance overhead again with some heavy volume, and it just kept beating up above it. So he thought maybe this was going to be the time where we could get this breakout. And we're also in the summertime, and this is a little bit more of a conservative play in a defensive area. So his definitely did better. He was at 36.76. The stock currently at 37.03. Market was weak last week, so the stock is up about 1%, even though the push and momentum was to the downside last week. I think the NASDAQ at one point was down over 3% intra-week. So great pick by Art. No doubt about it. I wish it was mine, but it's not. I got to take a look at mine, which was MGA, which probably would have been stopped out almost immediately. MGA, I put out 61.59 and talked about gap support. I really looked at this one as possible accumulation area between gap support, price support in the 60.5 to 61.5 area, and it was at 61.59, but it closed lower every day last week. Volume was heavy, and it continues to trade down. It was down another 1.6% today, all the way down $57.19. So it was an ugly week for MGA. So, all right, got my work cut out for me to try and bounce back this week. And I know, Erin, you've got yours. So what do you have for this week?
I only did 4 this time around. So let's see if we can get over there. All right. So the pick I ended up going with was DVN, Devon Energy. These other 3 I thought looked pretty good. The interesting thing is when I ran my scan, I am still continuing to get energy stocks, and especially in the oil area. I find that very interesting, and when I see that kind of a trend, I think I think you should go with it. Is kind of how I look at it. So Accenture was one of the ones that obviously is not an oil stock. All right, but this one I pulled it out just because, yes, it did look pretty good. I know the PMO is starting to slow down here, but of course, you've got over a 1% drop here, and that was one of the reasons, honestly, I liked it, because you're getting close to this area of really short-term support. If you want to look at that area right at 161. We might be getting ready to pop right off of that. Might require a little bit more downside to get down to that 20-day EMA. I thought this one looked, it had some potential. Certainly not my favorite. Like I said, mostly we had these oil companies. China offshore, I thought was interesting. This is really low volume though, which is one of the reasons I did not pick it. But I think there's some potential here in this double bottom that we might be seeing. You've got, even though we're getting that pullback, again, we're really close to that 20-day EMA. The PMO is ready to have a buy signal. So I thought this one was interesting. I mean, I'm not going to say these were great picks this week as far as Monday setups, but it just was one of those weeks I couldn't really get excited about any of them. But here's that area of support that I can see, and it's right there at that 20 and 50. So for a short-term pick, I couldn't go with it. As a little bit longer term pick, you could tighten up that stop and you've got some upside potential here. But the main thing is I would watch out when you've got volume at that level. ConocoPhillips, I thought looked pretty interesting. The PMO is getting ready for a buy signal. Here we go. Let's look at a little bit of support and resistance here. So you can see it's getting ready to hit this area of support. The rising trend is still in play. So I'm going to go ahead and annotate that for you. We'll make that a little thinner. Hang on, this is blurring up for me. Much better. Okay. So let's look at that rising trend line there. I don't need an arrow on it. And catch that bottom right there. There you go. So the rising trend is still in play here. So it's getting ready to hit lower on and get to test that area. And look at how strong that support could really be with that horizontal support there, as well as that rising trend channel. So again, I think this one could be an interesting play. It's now getting ready to come off that 20-day EMA. But again, short term, I couldn't go with it. The PMO is still looking a little bit suspect there now that it's decelerating. So I apologize that these are not like the best Monday setups, but it was just one of those weeks. And I would have to say that if you are trading, this would be one of those weeks I would just stay out for a little while until I could see something really tasty out there, a good setup. No point in forcing it, But okay, so Devon Energy though, I definitely like. So I had to go with this. And since I am getting so many energy stocks coming in, look at it's just getting ready to hit. It's already tested that support today at $43 and it's moving back up. This rising bottoms trend line is still intact. So even if you got a pullback just below, you could still be okay. I would have set, I'd set for a very short-term trade. I would probably not wait for it to get all the way down. But that 20-day EMA looks like it would be about at 42.50. So I think that would be a good stop for a very short-term play. And I think the upside potential here up to $45, nice. You've got OBV volume going your way. I suspect if we pulled up your relative chart, this would, in fact, I might even have that. Oh, I think I do. And there's your relative stock. So there we go. As far as even in its space, it's doing well. It's doing well against the S&P. It's sort of slowed down here, but in general, it's been a pretty good-looking stock, even though you can see that, that the oil services has been sort of in a decline. So I would say that this could be a really nice play. So that's what I'm going with. And, we'll have to see how I do. But like I said, this would be, I'm just going to be right out straight up. This is a week based on just looking at these scans. I probably would just shy away. I'd probably wait at least until we start seeing some rally happen. But things seem a little weak. I don't know if it's the trade tariffs or what it is, but I just get a sense of weakness here. Kind of mad I went into this week saying it close higher.
Yeah, well, I did the same thing. I didn't like seeing the futures, but the market tried to bounce back. We'll see how it finishes today. I do think, though, that you're onto something with the energy. I mean, I did mention that the crude oil prices breaking out. Normally, you see the XLE energy shares break out and go along with it. So I think maybe some of that strength that you're seeing in energy makes sense given what we were discussing earlier in the show.
Mm-hmm.
I'm going to go ahead with my pick for this week, Zillow Group. ZG is the symbol. And one of the things I like, actually, just looking back over the past few months, is each one of these really high red volume bars. You think, well, that's probably negative since they're red. But each one of them, if you look at this one, you had the hollow candle, which means you got the gap down, but then you finish above your open. So even though it was gapping down, there was heavy volume. There was actually buying from the open. And if you look at the mid-April gap down on heavy volume, same thing. We'd gone down intraday quite a bit. I mean, we were at $54 the day before, got all the way down to 47 and change. But then we came back up near 50 and closed near the high of the day. You look at May the 8th, big gap down off of an uptrend, heavy volume, and we actually went all the way back up, moved to a new high there temporarily. But you can see another hollow candle. And then just 3 days ago, when we had another gap down, very heavy volume, and yet we have yet another hollow candle. So to me, it looks like the stock is being accumulated. Each time it has some news out or something that triggers an opening gap lower, it seems like the buyers rush back in. So I like the stock. I don't like the fact that it's up 1.76% today and hitting the 20-day and gap resistance, but I'm not going to mess around with it. I picked it earlier today. So I will go ahead and stick with Zillow Group. Current price, $60.80. I would be looking at initial target up around 65 and change. And to the downside, I think this gap down now provides pretty solid support. We got a lot of buying that came in off of that 57.5 area. So I would actually use any weakness on it to accumulate. I think in my blog earlier, I annotated, and I can show you what I did. But I was looking at a couple of levels of price support. There was a prior high. So once we broke above that established support. Even though we gapped beneath it, we did finish back above it. And then I think the more recent breakout right here around 56. So I think you've got a couple of key support levels between 56, 58 and change. 50-day moving average coming up in between. And if I clear this out and we go over to that relative chart that I like to show, I think you'll see that ZG actually looks pretty good on its relative chart as well. Let me pull this up quickly. And you can see, so there's the Zillow chart. It's moving higher. Publishers doing extremely well. Looks to me like maybe an ascending triangle on the group in general. ZG relative to its industry, to its peers, performing pretty well, starting to turn back up again. ZG relative to the S&P moving higher. And then, of course, you can see publishers doing very well relative to the S&P 500. So I think the chart looks good. I think that it's in a good space. And so that was my pick for this week. I do have a few others And now the ZG I did get from my strong earnings chart list. These other stocks, I did not get them from the strong earnings chart list. They could be on it, although I don't recognize any of them. Actually, ATHM I'll talk about in a second. I think that one might be on my strong earnings chart list. But first, let's take a look at Post. This is Post Holdings. Thing I like about this one is on the push to the upside. PPO looks good. We're getting a 20-day test. So all of these stocks that I'm pulling up now are really based on technical levels as opposed to the fact that they're strong earnings and just happen to be pulling back. So I think here on Post Holdings, you could do a couple of things here. The rising 20-day moving average is a key level. I think also the prior high here on the breakout becomes support. And also you have a prior low here. So you got the 20-day at 84, and then you've got some pretty solid support 82 to 83. So you could use, like Erin was mentioning, if you're a little concerned about the market right now, maybe you just tiptoe in. 20-day test would be one entry. Maybe you wait and see if you can get this thing down in the 82s for a second entry. And then I'd keep a fairly tight stop below $82. But this is one I think that could make a run up for 88. So something to keep in mind. Next up is ATHM. So let's pull ATHM up. All right, ATHM. Yeah, I was looking at this one. It's got a long tail to the downside, all the way down 93 and change. And it is at 98.67. You can see the volume already at or close to average volume. And we're not even the halfway point of the day. So it looked like we were making a breakout or breakdown. And now we're reversing back up. So I think in the short term, that's good. If I was trading it, though, I'd really respect that 20-day moving average now that we've been trading beneath it with heavy volume. If we get a push back up to about 107, 105 to 107 in here with these moving averages, that would be a short-term exit point for me. CAVM. This one, when I looked at it, I'm going to come back to the daily chart. Let me pull up the weekly chart, because on a weekly chart, I think that the breakout, and I'm going to step this back even further. This is a 3-year chart. I'm going to go back a few more years. Let's go 7 years. But you see a lot of this resistance, a lot of overhead resistance at 75 coming across here. Look at the volume at the end of 2017 as we broke through $75. And then we went right back down, essentially tested 75, and now we're starting to move higher. So I think on the weekly chart, we are definitely between 75 and about 92, 93 range, and we're sitting in the middle of it. So there's the possibility that CAVM does go back down to 75. So that's where I would step in, look at it daily chart, realizing, okay, maybe we go back down here. So I probably would want to keep a fairly tight stop at that rising 20-day. I mean, if this is starting to make another push to the upside, then we should hold that rising 20-day moving average. Check out the higher price here back at the beginning of March. See the higher prices here on the weekly chart and the lower PPO and the volume just kind of being average. That was problematic. And if you weren't too concerned with that, you should have been concerned with the reversing bearish engulfing candle that hit right after that. So now you got a negative divergence, failure to hold the breakout, and a reversing candle. And that led to about 2 months worth of selling on Cavium Networks. And now we're starting to rebound. I would look for another push back up into the low 90s to test this level. But again, because the weekly chart says we might go a little bit lower, I would just keep a real tight stop here below the 20-day moving average. Let's take a look at just 2 more real quick. CCJ, this is Cameco Corp. I think the pullback here after making a breakout, you got a nice trend line coming up. I like that red hollow candle, the gap down off this downtrend. I think that may have marked the bottom. What would really get me excited is they close back up above the 20. You can see we failed on Friday. If we get a close above the 20, I think we have a shot to make another run above $12 on CCJ. And the last one I have is West Pharmaceuticals, WST. This one, beautiful move up, nice volume. I really like this pullback, piercing candle / hammer right on the 20-day moving average. I think this is one you can keep a fairly tight stop. Close below about 97.75 would bother me. Intraday move below, say, 96.75 would bother me. And in the meantime, look for a target up around 102. All right, let's pull up the summary on the stocks that Erin and I covered for our Monday setups. Again, as a reminder, Erin picked an energy stock, DVN, for her pick for the week at 43.75, and I've got Zillow Group at 60.90.
All right, I'm writing it down.
Yeah, I'm hoping I bounce back on this one. That was not good last week.
I know. We should have been keeping track all along.
Yeah. I
Get a
think you got me.
competition really going.
Yeah, you definitely had me in June. I think I didn't have very good picks in June.
It happens.
Yeah, and that's about the way my portfolio feels right about now as well. Anyhow, let's go ahead and move on. We're going to do a different spotlight today. Normally, this time we do an earnings spotlight, and John Hopkins will be back with us next Monday, and we'll get back into that. But today we're going to do a little spotlight on the RRG, and I thought maybe what we could do is do a little different look at things. So let's go in and take a look at. I'm going to pull up the NASDAQ 100 stocks. We're going to look at the RRG. And the way you can do this, now I've already set up the NASDAQ 100 in a chart list, but once you have something set up in a chart list, if you hit view all, the default will come up 10 per page. But if you click on this, you can switch to RRG. And it'll take a second for it to chew on it here. But there you have all the NASDAQ 100 charts in an RRG. Now we're comparing it against the benchmark of the S&P. I mean, you could certainly switch that if you wanted, use the NASDAQ index, use whatever you wanted to use. You could use the MDX. Actually, I'll switch this. This is not the way I'm going to pick these stocks, but let me just switch it, just show you versus the NDX, how they're still going to be essentially grouped the same. It's just depending on which index you use, whether they shift more to the left or to the right or whatever. So let's go back and just use the S&P 500, because what I thought we would do, a little special treat today, is I wanted to take these stocks, and I'm going to shorten this tail down to about 5 weeks here. And I'm going to look at all the stocks in the weakening area. And Erin is going to pull them up on her charts the way she looks at them and give you kind of her opinion on the fact that these are weakening. Are they in trouble? Does she think that they're ready to rebound? We're going to put Erin on the spot, see if she can come up with some thoughts on these stocks. And so the way you can do it is just go down below. You can see the yellow. These are the ones that currently sit in that weakening quadrant. And all of those stocks are right here. So Erin, I'm going to let you take it away. And we're going to start off with Adobe.
All right, let's do this. Okay. Okay, I have them all in here. Yes. So I wrote them all down. Let's take a peek. All right, Adobe. Yeah, it's almost like the 10 and 10, only I'm doing it.
There you go.
All right, I'm going to annotate real quick. And I'm looking at support right here. I think that's really strong support. We didn't even have to go down and test it the whole way. I would be a little leery about this rounded top, possible head and shoulders forming here. And the PMO is in decline, but we can see that it is in oversold territory. I don't know. I wouldn't have this on my watch list at this point. You've got, let's see where that overhead resistance lines up. Yes, you can see the overhead resistance is lining up with these previous tops with support. And I'm not confident when I look at this chart that we're going to see a breakout anytime soon.
All right. I think your second one was Amazon.
All right, Amazon.
Yep.
Oh, I have the Autodesk in there. I don't know why.
I think they just sorted alphabetically.
Ah, got it. All right. Yes, Amazon, another one that's in decline here. But honestly, I just don't think you can really go wrong with Amazon. I'm going to look at where that support resistance is. I am now a big time user of this auto support resistance line, Tom. I never used to use it. I would just use, draw the trend lines, but so handy. All right, well, you can see we hit that support level and immediately bounced off. I can see a rising trend channel if I went to a really short-term chart. Of course, it's always a little bit concerning when you see the PMO in decline as well as the OBV. So, but like I said, I just don't feel like you could go wrong with Amazon. If you're in it, I'd hold it. I mean, this is one I could buy and hold forever. But if you're looking at it in the short-term time frame, you may want to wait and see if we don't come down and test that 1650 area. But like I said, in all honesty, it's hard to go wrong with the Amazon.
All right, you got a third one here. I'll give you his IDXX.
Okay. Interesting. All right. What's interesting, of course, is you notice all of these PMOs are in decline, which makes complete sense considering we're pulling these off of the weakening quadrant from the RRG. So I'm just going to say right off the bat, when you see these declining PMOs, you know that personally, Erin's not going to be jumping in. So, but that's not always the reasoning behind getting into stocks. And so I recognize that. And if that's just not that important to you, we'll look at all of the other setups here. I keep seeing these kind of like head and shoulder patterns here, and it's really a concern for me. You're probably going to get down here to test that area around that 210, 212 area of support. That's an important area of support. It also lines up with that 50-day EMA. If we can't hold that support, not good. If we can get there and then get that bounce and see that PMO start to at least decelerate, then it could be a possibility. But, again, these are weakening. So obviously the momentum is going to be lower, but they're, again, people trade. I know you don't trade specifically off the PPO, Tom. So, it's other things to consider.
Yeah, more of a secondary indicator. And that's the thing. All of these PPOs or PMOs, like what you're looking at, they're declining, but they're above the center line, which tells you they've been strong stocks, but they're pulling back. The next one up is Autodesk, ADSK.
All righty, here we go. All right, really, okay, I'm seeing some support here. This is really a trading zone, though. I mean, I just look at this and I see a really wide trading zone, trading channel. We're getting a bounce off of support here that has held, but again, you've got a strong stock here. We might be seeing that move upward, but the 20 is getting ready to drop below that 50. I don't see a lot of opportunity here. You can also see that this resistance lines up back here to that November top with where we're at right now. So I'm not a fan.
Does that PMO touching the center line, does that help you at all, or do you?
No, because I'm mainly interested in direction. And like you were saying, above or below the zero line, I want to see deceleration at a minimum if I'm getting ready to get into something. And while there is some deceleration because of this consolidation area, I mean, let's face it, you can make a case here for a reverse flag. So, if it's going to go below the zero line, look at it already. It's already gone below both of the previous bottoms. So it's just not healthy right now.
Okay. Let's see. We got 4 more. Let's do Akamai, AKAM.
Excellent. All right. This is kind of interesting, actually. I'm going to go into annotate really quick here. And I'm saying that because I'm looking at, that's some pretty important support. You can see how that was a little bit of a trading zone. So I'm just looking at all these different possibilities. There's gap resistance up here that matches with that overhead resistance. We popped back up. We got above that area that I would call resistance. The PMO is not quite looking as good as I would like to see it. But if you're looking at these other secondary indicators, the OBV is starting to turn up and look better. And you can see the scooter. It's getting ready to move back up into that hot zone. So there's some possibility here if you're okay with the momentum and the 20 and 50 in decline right now. But I think that's a pretty good trading range. And of course, you've got some really lots of upside potential here. I think this one looks interesting. Let's put it that way.
All right, we've got Cisco Systems, CSCO.
Let's see. Okay. I'm going to have to annotate this one. All right. Yeah, I'm pretty much, I mean, as people who have watched this show, I do depend a lot on the PMO when I determine when to get in. And I could show you a million examples of why it's a good thing to wait for that PMO to turn before you try and bottom feed or pick a stock that's just getting ready to make that turn. And so that's a problem when I look at that. You've got a PMO, it was just starting to turn, and now it's been yanked down. Obviously from this gap down, it's coming in below support, like pretty serious support. I mean, look at where it lines up, all these touches of that line, and we're now getting that drop below. Of course, we had a fake out breakdown back here. So, if you wanted to give this a shot, you could set your stop pretty tight here at about what, 41.80 or somewhere in there. And then, give it a shot, see if you can't get to that target around 45, 46. So interesting. But I don't like that gap down and the fact it broke down below this really important support.
Mm-hmm. All right. How about Fiserv, which is FISV?
All right. All right. I'm not so sure. I got to look at this one a little more closely. Nothing's like popping out to me right this moment. Okay, there you go. So see, we've got a horizontal now resistance. It was support even back here. And, we've dropped below it. However, you can see that it is right now testing that 50-day EMA, and so far it's holding up. Broke back above it after trading here, it looks like on last Wednesday, broke below that 50, managed to get itself right back up, continued to trade above it, holding up on that 50-day EMA. Let's see if we can see what this support area lines up with, if anything. So it sort of lines up right here with these tops and maybe some bottoms in here. So, it's a pretty good support level. I would wait though on this one for a breakout. I need the PMO to start looking just a little bit more promising. You've got a pretty strong scooter, so that gives you a little confidence, at least in the intermediate term, that this should be a strong stock. It should hold up. OBV, we're seeing some better volume now off of this move upward. So this, it could be interesting. See if we get some accumulation after all of that distribution.
All right, we got one more, so let's do Express Scripts, ESRX.
All right. And any of these look like, hey, I would totally get into that for you?
We can talk about it in a second. I'll let you finish this one first.
Okay, no problema. Okay. I'm looking at this shorter term support and resistance. We're hitting right up on that overhead resistance. And you know what? I could even draw a trend line here. Let's see, a blue one. Yeah, we'll make it dotted. Why not? Look at that overhead resistance on that declining tops trend line. Very steep declining tops trend line. Let's see if I can drag it down there. Oh, okay, well, maybe you could get that into a declining wedge a little bit there. Yeah, I think you could. That is a bullish pattern. So yeah, I can see a little bit of a declining wedge there. Got to get break out above that overhead resistance though, absolutely. If you get the breakout above that resistance level, look at that. You've got declining tops line resistance and you have that horizontal resistance there to get through. So if it could pop up above that, that could be a pretty interesting play because you've got some nice upside potential here. Let's just look all the way back here. If you want to go back to this gap, you could do that. But in any case, I think your upside potential here is pretty darn good if you get that breakout.
Yep. Yeah, when I was looking at the charts, obviously Amazon's a good one. All these stocks, it's kind of interesting when you go through and you look at this because these stocks, and I know when we've had Julius on the show, he likes these stocks to go in the weakening and then turn back up and head back into the strongest quadrant. And I think what you're saying with the PMO is that you need to see that as well. You need to see that turn. You need to see that PMO start to turn back up to be, I guess, assured that, or at least feeling better about that move back into that leading quadrant. And so I kind of get that. I'm more of a, as long as the stock's been an outperformer, I like to use the weakness to get in. So Amazon to me, I thought looked interesting. And I thought also, I liked Autodesk on the pullback. I thought that as it gets closer, it's got massive gap support at 120 after a huge gap up back in March. So it's trading below the 20. I wouldn't just go running into it, but I do think that if the market's weak and Autodesk continues to trade down, I think if it got down in the lower 120s, I think that Autodesk actually, yeah, you can see right there at the moving average. What's that, your 200-day?
Yeah, I use an EMA, so it might be different from yours.
Yeah, but I mean, there you're getting down close to that gap support and that double bottom that we saw back in April. And so I think your reward to risk would really start to turn around on a stock like Autodesk as you got down there. So these are stocks that have been performing well. These are the ones that are moving down out of leading. And so if they began to start to show signs, or they hit major support, or they were starting to show major signs of a reversal back to the upside, that's when I'd start to get more interested. And I think that kind of aligns with what Julius has said. And I think also with what you're talking about, you're looking for the momentum to begin to pick back up again.
Yeah, absolutely. And yeah, I could give you so many examples of, where you could give that shot to get back in when that momentum shifts after a nice downturn. I mean, over here, you could see it, the PMO is already starting to slow down. I'd probably miss that one, but because it hadn't been rising long enough. And then when you watched that, you could see how you got that rising trend, but the PMO was still mostly declining there. So that gave you a pretty good hint. And again, there's your drop. And then as the PMO started turning back up, that was the time to get back in. So I think the PMO, PPO, of course, I think they're both really strong indicators. Especially, I know a lot of people, like to buy on the way down sometimes on these. Watch the PMO if you really want to start getting in near bottom. Look for it to at least decelerate before you start getting in there.
Yep, I agree.
Okay.
Yeah, let's go ahead and summarize. Let's go ahead and summarize these so everybody can see what we just talked about. And again, that was just having a chart list. I've got the 100 NASDAQ 100 components, and it's so easy once you have a chart list established. And establishing chart list is easy. We can talk about it another day. But putting those stocks in was simple into a chart list, and then quickly being able to see it in RRG as to what's leading and what's not, and where things are starting to turn, gives you ideas. And I think that's what Julia said when he was on here, and has said every time he comes in here, that he uses the RRG to generate ideas and then pulls up the charts and tries to decide if that's something he actually wants to take action on.
Indeed.
All right. Well, we do have a poll. We just talked a lot about the NASDAQ, and I'd be interested in getting everyone's thoughts on, what they see coming down the road. We just started the second half of the year. So the question was, what index do you believe will lead in the second half of 2018? And wow, more than half are going with the Russell 2000, 32% NASDAQ, and S&P and Dow pretty low. So I guess everyone based on that is still believing that these trade war fears are going to continue to linger on, and perhaps maybe the dollar continues to rise.
Yep, I have to say I voted for the Russell 2000.
I didn't vote, but if I had voted, I would have voted for the Russell 2000 as well. I do think that the dollar's going higher, although I didn't like the action on Friday. So unless we get a real quick breakout to the upside in the dollar, I think we could just kind of consolidate on the dollar for a bit, which maybe gives the S&P and the Dow a chance to recover a little for a brief period. But I still see rates going higher. I read earlier, Erin, I think it was, who was I reading? I think it was Morgan Stanley. There were one of the economists at Morgan Stanley made a post announcement, something that he's calling that the 10-year Treasury yield topped at 311. That's it. It's done. Done going higher. And yet, I think Jamie Dimon came out from J.P. Morgan and said he's looking for 4% 10-year Treasury yield. And the thing is, depending on which one of those two guys is right, because one of them's probably going to be right.
Yeah, I would think.
That really changes your investing strategy. I mean, if the dollar's rising and, if the 10-year Treasury yield's rising, chances are the dollar's going to be rising, and that is definitely going to have an impact on which one of these indices you pick.
Mm-hmm.
So anyway.
Yeah, you need to keep in mind all of the different, what's going on in the market in general and all of those spaces before you even start to look for your stocks, in my opinion. You've got to know the big picture first. It's absolutely necessary.
Well, it's either going to provide you a tailwind or a headwind. And it doesn't mean that it's going to completely change that the strategy on that particular stock or ETF or whatever you're trading. But it certainly is going to provide either a tailwind or a headwind.
All right. Well, while we were talking, we got a bajillion 10 and 10 stocks to choose from here. I have 36 requests. So I will show you very, very quickly
I never knew that a bajillion equaled 36. Just now.
I know my California accent is just coming through so strongly.
Hard time.
I always try to kind of tone it down, but sometimes I just can't, and it's a Monday, so I'm going for it. Okay, well, let's see. We're back here. We don't want to be back here. There we go. So what I like to do, of course, we can look at that RRG and where everybody's flowing. Let's see here. And I wanted to look mainly at the sectors, what are we looking at? And interestingly, we only had one from the lead improving category. So we'll probably be looking at Alcoa later. But right now we'll start off with First Solar, and then the most popular request so far in the chat room, it's between Netflix and XBI, which I believe is the materials ETF spider.
Okay.
Biotech, my bad. Look, there it is.
All right, let's go ahead and take a look at First Solar. First Solar, clearly has been under a lot of very heavy selling pressure. First week, maybe 2 weeks of June, you can see the volume really shot higher. Prices fell apart to the downside. The PPO is starting to show some strength, but to me, it's false strength. What it's telling me is that the huge acceleration to the downside is slowing. This does not, to me, indicate that we're actually strengthening, which is a big difference. Here, we're in a bear flag. I mean, the price is straight down, sideways action. So I'd be watching for one of two things. I would either be watching for a breakout above this 20-day moving average and this initial reaction high on heavy volume. If we can get through $55, then I think we have room maybe up to about the 60 level, which was a key support level. And also there's a number of gap resistance areas, but that is one up at $60. So I would be watching $55 initially. And to the downside, I think as we get close to 50, I expect off of a bear flag that we're going to resume the downtrend, but I'd probably look for a little bit more consolidation first. So I'm not a fan of First Solar unless we can see the volume really begin to pick up and get through $55.
Okay, and the most popular in the chat room is Netflix. So let's go for it. And good thing it's the most popular, because we had, I keep that spreadsheet. I don't know if any of you saw that, of all of the symbols. And so I do try to not repeat for a week and a half of our symbols. So that one we'd already done. So good thing you guys voted for it as the most popular.
Yeah, I really like Netflix. I own it. We got it on the 20-day moving average. I'm continuing to hold it as long as it holds 20-day EMA support. But you can see that on the breakout here in mid-June, very nice volume to support that. So just to highlight that, again, if I was keeping an annotated chart in a watch list or something, that to me is very important. The heavy volume that accompanies this breakout above about 365, 370. So that's a pretty good support level. At this point, I got into my entire position at the 20-day. There had been another way to handle this. Could have gotten in at the 20 and then also half of it at the price support level, and then simply had a stop beneath price support. But I chose to use the 20-day moving average as both my support and my stop area. So I will have a very tight stop on Netflix, but it wouldn't shock me to see a move off of the 20 back to new highs, very similar to what we saw back in February. After moving higher on heavy volume, we pull back at the 20 and then off to the races again. That's kind of what I'm looking for here. But I did want to just throw out that the pretty decent price support area around 365 as well.
All right. What I thought would be interesting to look at is Rite Aid. It took a huge hit. I think it was Thursday and Friday, based on Amazon picking up PillPack. So what do you think of it right now? I was just sort of glancing at it. It looks like it's hit some support.
Yeah, I mean, it's trying to rebound, but it's done this last few days. It's put in some tails, and then it just keeps going lower and lower. I think the key support level is going to be that March low. So I would annotate it and just be thinking that if I was going to take a shot, I would actually feel best if we tested this low and maybe an intraday move below that, come back up. We do have some support also at these couple of levels here, but it's more of a shorter term support. I think the more significant one's down around 140 and 147, 146, something like that. Stock was just up 210. PPO looked good. But unfortunately, this is what happens in a stock that's been downtrending for a while. It looks good in the short term, and then it just falls apart to follow what it has done in the past. So I'm a little suspect, RAD, Rite Aid. I mean, we've seen the stock drop quite a bit over the past few years, or at least if I recall. But I'm going to pull up that longer term chart here. Just 1 second, but there's the annotation. This is the sport I'd watch in the short term. But let's get that weekly chart. And yeah, this is what I was referring to. I mean, this stock was $8.50, $9 back at the beginning of 2017. Now it's $1.67. So yes, the short term look good, but the overriding longer term chart remains very bearish. And you can see on this weekly chart, the support really comes in probably a little bit below that 150 level. So I'm going to pass on Rite Aid.
All right. Let's see, the next one I have for you will be that Alcoa AA.
All right. And by the way, for those of you who like to bottom fish and get these stocks, and consider them value plays, Rite Aid may turn out to be a great trade. It's just not my strategy. I don't try to find bottoms in stocks or try to, make the argument that they're valuable at a certain level. I want to see the momentum in the stock, and I'm just not seeing it with that one.
No.
Alcoa, I could probably say just about the same thing. I mean, we're starting to see a little bit of strength here, but notice the failure at the 20. And we also struggled earlier in June as we approach this 20-day and also gap resistance up near $50. So I think that the overall downtrend here continues, although we are close to a major support level on Alcoa. So let's take a look first at the price support, which I'm going to say is just above $44 here. We've had, and this, by the way, is what I would look for. I'd mentioned earlier, when you get a tail that goes below prior support, especially major support, then I would look for short-term strength. We got some of that, and at this point, we have failing at the 20-day moving average, that declining 20-day moving average. So as long as that continues, I would be looking for resolution to the downside. I'd avoid it.
Okay. Next one, we'll do that biotech ETF spider, XBI.
All right, XBI. Let's take a look. I love the hammer on the 50-day moving average. That was the same thing that printed on the IBB. And it also, on the XBI, printed at price support. And so that just adds more reason to be bullish when you get a reversal. Here, we had broken down, looked like things were really horrible, came back up, closed above this level. I think right now we're just trading in a range, and I'm going to bring this line down just a tad to connect with this low. And then the prior low before the breakdown was right here. See this low right in here? And then the heavy volume, we went down, set a new low, and now we're bouncing and we're struggling to get through. Notice the 20-day moving average is just above resistance and the 50-day is just below support in the short term. So I would be watching this resistance at the 20-day. And at the same time, I would also be watching the support just below the 50-day. So I think we're squeezing on the XBI. I expect it to break out to the upside. Keep in mind, from the July seasonality report that I did last week, biotechs love the month of July. Doesn't mean anything, doesn't guarantee us we're going higher, but it's worth noting that July has the tendency for biotechs to do very, very well.
All right. Excellent. The next one I have for you is going to be from the financials, REITs. I had written about these, I don't know, a month ago, about intermediate term movement to the upside. What do you think of Care Trust REIT, CTRE?
CTRE, yep. All right, CTRE, negative divergence. So that would bother me a little bit in the near term, especially if it lost support. The volume has been strong throughout this move to the upside, so that kind of counters that negative divergence a little bit. But I would at least have this annotated because I'd be nervous if I failed to hold my breakout level. You can see that the PPO has been coming down while prices have, for the most part, just been going sideways. But the breakout level, I think if we lose it, which would be somewhere right at about 1670, maybe 1665, I think if we lose that, then your next price support level down at about 1620 comes into play, and possibly even the rising 50-day moving average. But for now, volume trends are strong. I'd be okay. Just be on guard in case we break down below that price support level.
Okay. Let's see, how about an industrial in the defense industry? I think those are probably going to be interesting coming up here. AV, AeroVironment.
Yeah, the big breakout, I think I mentioned this one last week. I can't remember what segment it was, but I thought the breakout here was very attractive. I mean, obviously, I'd prefer to get a pullback now, maybe to test that rising 20-day moving average, but I do think that it's very bullish that we are seeing that breakout occur on this kind of increasing volume. So I expect we're going to continue to go higher, pull back down closer to the rising 20-day moving average, that I think sets up a better reward to risk trade.
Sweet. Okay, here we go. Next one, TVPT, Travel and Tourism, Travelport Worldwide.
All right, volume is picking up and we're at resistance. So I think today is going to be a pretty important day for the stock technically. We want to see a breakout. We don't want to see a long tail above the breakout level and a close beneath, because that to me would suggest, not guarantee, but suggest a short-term pullback, maybe perhaps back down to this recent breakout area around $18. So I would be watching it to see if as a short-term trader, if we failed to close above 19, I would take my profits and move on.
Okay. Next one in utilities, 8x8, EGHT.
All right. EGHT?
Mm-hmm.
Okay. Yeah, I like the breakout today. I'd like to see a little bit more volume. I think we're still going to struggle if we do manage to get up to the top of gap resistance. That was a huge volume day. That is where we closed at. Here is where we opened. We were at $22. We opened at $18.50, and we may go back up to fill that gap. You can see, though, what happened when we had a false breakout above the prior high. So let's annotate that right in here. See, we pulled back for a day and then looked like we were making a break and a run for it, and then pulled back, and the next 3 days were weak. I would be careful if it looks like we're breaking out and then we close back below, say, $20 today. That would be a bearish short-term development. Otherwise, I would expect that we're going to run up closer to 22. I'd be a seller at 22 until the stock showed me that it could close above 22 on some increasing volume.
All right, and let's finish off with Gilead, GILD. You know, we looked at XBI. How does this one stack up in that industry, biotech?
Gilead, I think this is one too that Arthur talked about when he was on the show last week, that he liked the fact that it was coming up and just kind of hanging up here near this gap resistance. I would like to see it make the breakout. I wouldn't be so quick on the buy at this point, but I do think if we break above 72 with increasing volume, knowing that biotechs do as well as they do during the month of July, that would encourage me to take a shot with the stock. I would watch, and if it does that, I would then watch the rising 20-day moving average, because I think at that point it would be pretty clear with the PPO above the center line that we've got an uptrending stock. So I wouldn't want to lose the 20-day in that case. But I'd like to see the breakout first.
All right. And that completes the 10 and 10. And here are the stocks that we did look at. And I will get all of these symbols and those annotated charts into the into the Market Watchers Live blog. You'll find the link at the top of that blog. All right, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, and here we go with our final market update. As you can see, we had these gap downs on the major large cap indexes, and since then we've been consolidating mostly sideways. So we didn't end up with a huge drop going on here. And you can see the NASDAQ looking a little bit more healthy, still down at 74.94 points. And we can see that mid caps, very similar, not a surprise. Big gap down, and we've taken up about half of those losses. and we'll see how we can do and get up higher there for the S&P 400. But small caps looking pretty good. Russell 2000, it's still on the downside, but it's getting ready to hit that resistance at Friday's close, and we'll see if we can't get that breakout. TSX, we have a similar look here, only on the upside. We can see that TNX, the treasury yield, the 10-year treasury yields are up right now at 2.86%. TLT, the 20-year bond ETF, is pretty much mostly unchanged at this point. You know, it had a nice move in the morning, but it's come back down and now is trading well, it looks like as unchanged right now at 121.45. UUP dollar, big gap up, moving sideways now. USO, we had that big drop, but we've been spending the rest of this afternoon moving up toward Friday's close. We could see a positive close on USO, but currently down 4 cents. Gold, big gap down and just moving lower, really not putting on any of the brakes at this point. The VIX is, you know, we opened it up around 18. So we have pulled back close to the 17 level, but that is still pretty high. And I'm going to just show you my VIX chart here. I want you to see it. Oh, that's not it. Alrighty. There it is. I knew it was in here somewhere. All right, so I wanted to show you my climactic indicators, because when I look at the VIX and if I see it moving below that lower Bollinger Band, I get a little interested in a rally pop coming up the next day or two. So I'm seeing that penetration there of that lower Bollinger Band. Now I'll be watching at the close to see if we get climactic readings on breadth. So I thought that would be interesting for you to look at. And that concludes our final market update. And Tom, did you have anything, or should I just move along?
Yeah, just go right ahead.
Okay, perfect. So let's go ahead and we will start up with our July decision point review. So I'm going to show you the monthly charts for all of the major indexes and ETFs that we cover. And I will also try to get in some of those weekly charts, but I can't guarantee that we can get all the way through. I just mainly want you to see those monthly charts. Those are the important ones when you're going into the next month. So let's go ahead and get ourselves started. I wanted to start by looking at the decision point scoreboard so you can see where we stand. And with all but the NASDAQ, you're going to see this same configuration. Momentum in the short and intermediate term, those PMOs on the daily and weekly chart are on sell signals, and they really aren't looking healthy. We still need the midterm trend model here, the intermediate term trend model. That's the 20 and 50-day EMAs. And it doesn't look like they're ready just yet to have a negative crossover. So I would say the buy signal here is going to hold, and same with the momentum in the long term as well as the trends. But here's the different one. So all of the others look the same, but the different one right now is the NASDAQ 100. And you can see we've got a few interesting things going on here. First, the weekly chart, if you look at it, is currently now reading with a sell signal for the weekly PMO. So this particular green arrow, I would look for disappearing after the close on Friday. And you can see in the short term, NASDAQ's still doing fairly well. So let's go ahead and look at some of these monthly charts. Okay, and this is the Decision Point Live list of charts. And you can go to those similarly, like you go to the Market Watchers live chart list. You can go to the Decision Point blog and find the link to this chart list. So you'll see all of these charts. I try to keep them up to date. So let's go ahead and just get started. I want to show you, though, first this weekly chart of the NASDAQ, because that's the one I was saying. You can see that we had the buy signal. And look, right now, I did back it up for Friday just to see after the close to make sure we did not get that sell signal. And we did not get that signal on June 30th. So we on last Friday. So we can hold on to that buy signal, but it looks like we're going to hit a sell signal at the end of the week. But what's going on with that monthly chart for the NASDAQ 100? Rising trend channel, still looking pretty healthy. You know that we scored some all-time highs back in in June, but we didn't end up closing quite up there. We pulled back. This bar, the green one, of course, is just for today. Because it's the first day of the month. So that's why that one's sitting where it is. And, you know, the PMO has now started to top on a lot of these monthly charts. I suspect this one, if I back it up a month, we're probably not looking at a decline just yet on the NASDAQ 100's monthly PMO. So right now it's looking like it's going to go down, but we have to wait until the end of July before we know for sure if we're going to get a topping move here out of the PMO, because it certainly could come back out of it. And one thing I do point out with these rising trend channels, I mean, these are long-term on the monthly. I mean, we're looking at a rising trend that, you know, honestly started back end of 2008. And overall, we've been in this nice rising trend. And you know, right now I've put this trend channel in here, and we're near the top of it. So when the market gets really weak, I start to worry about the fact that we could preserve the long-term rising trend and still have a pretty major drop here. So that's what worries Carl. That's what worries me when we start seeing some serious deterioration on the weeklies and monthly charts. But right now, we're holding up. That PMO looks as if it's going to turn down by the end of July. We'll have, like I said, we'll have to see, because these charts do not go final until the end of the month for those monthly charts. All right, let's look at the monthly chart for the Dow. And here we go. One of the things you're going to notice on the other three indexes is the possibility of a bull flag. And of course, that's what you want to see getting ready to, as you're testing this 10-month EMA, you want to see that set up with a possible flag there. And really, if you get in the thumbnail, you could even make a case for a symmetrical triangle a little bit here. The main problem is the long-term PMO is continuing its drop. And we could end up seeing, I don't think we would see that sell signal at the end of July. I think we're going to be able to hold off on that unless we see a huge correction. I would expect to see these more than likely continue lower, but hopefully we're going to lose some deceleration and not increase it like we can see we have just as of late. All right. Let's go ahead and look at the OEX monthly chart. And like I said, you're going to see a very similar situation. Now, you could also, I did not annotate that flag on the S&P or on the S&P 100, but I think you could make a case for one. And the only problem is, as you're noting on these, are those long-term tops on the monthly PMOs. And in the case of the S&P 100, we very well could see a PMO sell signal on that long-term PMO at the end of July. So this one's going to be a really important chart to look at. We'll have to see if that's going to lead those large caps, those really large cap stocks in that S&P 100. Just have to see if that can hold up. And we're also seeing the same problem here on the S&P 500's chart. Look at the PMO. It's getting really, really close to that downside crossover. That would give us a PMO sell signal in the long term. Don't want to see those. As you can see, when we get those crossovers or the PMO even just starting to turn over. In this case, we saw mostly consolidation, but we had to go all the way down to that 1800 level. So I do not want to see a PMO sell signal. Hopefully we will do like we did back here after the correction, that we will get that PMO to turn back up above that its signal line, but it's not looking too good, except for the fact that I am seeing this bull flag, and you can see we are sitting closer to rising bottoms trend line support. IJH, looking at our mid caps. And here we go. Rising trend channel. Again, seeing these long-term PMOs getting ready to have sell signals. I mean, there's a lot of weakness here in momentum in all three time frames. I mean, you saw those scoreboards. We've already seen the two on the short-term and the intermediate-term PMOs on sell signals for all but the NASDAQ. And remember, the NASDAQ's likely going to kick its one in on Friday. So we're starting to see some serious problems in momentum. And if we get these long-term PMO sell signals, I would be concerned. Now you can see we had one back here at the end of 2014. Obviously didn't turn out to be that horrible, but you could see the PMO was not accelerating lower. And then once we started to get that fake out as far as that rise on the PMO to get rid of that sell signal, it didn't happen. And we started to see it move back down. So, you know, we'll just have to see. I always hate to say that, oh, well, we'll just have to wait and see, because of course that's what we all have to do when we look at these charts. But I'm watching to see if we get that long-term PMO sell signal. And I would expect to see those on those large and mid caps. But look at the small caps. We're looking a bit more healthy here, aren't we? Rising trend channel, but look at the PMO in the monthly chart. We're still seeing those rising on the S&P 600. And if you look at the Russell 2000 ETF IWM, same. PMO is still rising. You know, last month, of course, like the NASDAQ, we hit some all-time highs on the Russell 2000. You know, we are vulnerable to a drop down to test that rising bottoms trend line. But, you know, with that PMO rising and looking at the weakness in the large caps, I think this might be where the money flows start to go into the small caps, like it already clearly has with the rising dollar. Let's look at the big four monthly charts. Get those in before we close out. I like the dollar still, and I know, Tom, you still like the dollar. And you know, when you look at the monthly chart, it's all good news, in my opinion. You've got a rising PMO right now. It's now pushing itself back up. We're holding on to this support area at 92.50, very positive, after we broke out in May. And that was a declining wedge. So you want to see those wedges execute. And, you know, if you want to go and figure out an upside potential move, you know, you can measure the backside of the wedge. And that really, it would put us right up here, you know, at that 102.50, you know, up to that 105, 104 area where we saw the top back at the end of 2016, beginning of 2017. I think the dollar still looks good in the long term. So what does that mean for gold? Gold's at a critical point right now. You know, we've got a topping PMO. You can see that we're getting ready to test this declining tops trend line. There is support though, here at that 1280, I think 12, well, okay, on this one, 1200. But if you look at the weekly chart, which I'm going to show you, hopefully we're going to see this hold up. But the PMO is really sending us a warning sign right now. I would be a bit concerned. I want to show you the weekly chart very quickly. And here you go. You can see we've got the PMO sell signal on the weekly chart. We're getting ready to test important support at that 2017 bottom. You know, when I look at a PMO like this, getting ready to hit a zero line and move lower, I would be very concerned about a drop, in this case, down to support at 1200. I think that gold is quite vulnerable to that in the intermediate term. All right, two more to go. Oil, what's our monthly chart looking like here? Interesting is what I would say here. We're getting ready to test some overhead resistance, some very important overhead resistance at $75 for West Texas crude. So I'll be watching this closely. Based on this chart, it really looks like we should see a breakout. I mean, this PMO is very healthy. It's not overbought. There's certainly more upside potential. It can handle more upside movement. Next area of overhead resistance, of course, would be right around that 82.50 area, it looks like. And there you go. Here's the weekly. Give you another picture of what's going on. So we can see, again, this is USO, getting ready to hit that overhead resistance at $16. So it should be interesting. 30-year Treasury bonds. Here we go. Carl and I have both been watching this long-term head and shoulders pattern, and it has executed. And I would say that it is, although we haven't continued to see it drop, and we got a little bit of a bottom back in May, June. Look at the PMO. We're looking at a reading now that's lower than we've seen since 1985, somewhere in there. It's the last time we saw the PMO this low. Danger, danger, Will Robinson, for those of you who are familiar, not liking it. So let's go ahead and I think we'll go ahead and summarize what we've looked at. So I did go over those monthly charts. Recommend you go in to the Decision Point Live chart list and look at some of the indicator charts as well. I didn't get to it, but the PMO analysis charts are looking very interesting right now. So I would recommend a peek at those if you have that, and check it out. I'm going to probably write about that in the Decision Point blog today or tomorrow. So here you go, monthly, weekly, and daily charts. We can see as far as the large caps. Let's keep going. Next one. All righty, there's the Decision Point scoreboards, which I went over briefly. But as you can see, NASDAQ looking the best. We're still holding on to these intermediate term trend model signals, the 2050s. 20 is above the 50-day EMA. Look at the weakness in the Dow, real problem there. Okay, keep going. And you can see here, I've got the summary of what I'm looking at. I would say just to summarize this chart, small caps still looking very strong. And you could certainly see that on all of those monthly charts. And that concludes the monthly chart review here. There's your dollar and gold, bullish dollar, bullish gold. And then you can see for oil, I'm still bullish on that. It's not overbought. PMO looks healthy. And oh, not 3-year bonds, my bad. 20-year bonds, 30-year bonds, USB, dollar USB. Head and shoulders pattern is executed. Minimum downside target 120. Not too good. I wouldn't be in the bond arena just yet. We're seeing some very low PMO readings. And actually, when you saw that, we're now since 1980, what did I say, 6, the lowest the PMO has been. Well, there we go, Tom. Here's our upcoming schedule for next week. And I will be doing my workshop tomorrow. I think I'm going to be doing it on how to trade chart patterns. I'll pick out a few chart patterns and show you where I would suggest, hitting stops, looking at upside targets and that sort of thing. Nothing on Wednesday. Happy 4th of July for then. We're on No Market Watchers Live, and Bruce, of course, is coming in on Thursday.
Yeah, it looks like, first of all, good update there on the decision point, but it looks like gold really struggling here and breaking down to some new lows. And tell you, with the dollar looking to want to go higher, I don't see too many bullish arguments for gold here.
Yeah, I have to say the same. And I recommend people read Carl's weekly wrap in the Decision Point blog, because he goes over what I just went over on those monthly charts, but he also goes over the weekly charts and the daily charts, so you can really get a feel for what he's looking at in all of the 3 time frames.
Awesome. Okay, well, it's time to wrap things up. Again, just to reiterate what Erin said earlier, July 4th is Wednesday, so we won't be around. Of course, the market will be closed. I do want to thank everybody for being with us today. Please remember to complete the survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. Hopefully, we'll see you back here tomorrow on Tuesday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.